Thank you very much, ladies and gentlemen. Continue to enjoy your lunch if you are still eating, but I would like to get your attention now as we move on to the next phase of this afternoon. We are asking you to get your phones out as we are using the online Q&A portal, Slido. So it's slido.com, so there it is there, so QR code that again. That's slido.com and use the code 24SEP, 24SEP, as you can see it on the screen. Of course, if you have any questions throughout, of course, please enter them through the Slido mechanism, the app, ladies and gentlemen. Alrighty. Jim Beyer has been the Managing Director and Chief Executive Officer at Regis since October 2018. He's a mining engineer with a broad range of strategic, operating and startup experiences encompassing more than 30 years across a number of commodities, including, of course, gold, copper, uranium, lead, zinc and iron ore. And prior to Regis Resources, Jim was the Chief Executive Officer of Mount Gibson Iron Limited as well. He holds a Bachelor of Engineering, mining degree, a Master of Geoscience, Mineral Economics, and is President of the Association of Mining and Exploration Companies Executive Council. Would you please give a big, warm welcome to Jim Beyer, ladies and gentlemen.
Five-minute warning. Did you say something then? Sorry, I just have to get something out here first of all before we start proceedings. Go the lines. Okay, all right, well, thanks everybody for coming along to lunch and having a listen to the Regis story. Thanks very much for the WA Mining Club for the opportunity to present it. Now I've squeezed myself out with the scarf, so slides up there. All right, well, I'm just going to talk through a little bit about what I was asked to do was talk a little bit about Regis Resources and give some background on the company for those of you that aren't aware of who we are and what we do, and then to sort of close it out a little bit to give a bit of a story on, I guess, part of the background. People may be interested, or why the hell you would be, I don't know, but you might be interested in the process sort of things that I did to get into the role that I'm in. So I'll wrap up with that on a couple of slides at the end. We do talk about some forward-looking commentary, and so I draw your attention as usual to the cautionary statement and the production targets and the exploration, which if you breach them, you've got to give away your firstborn child. At least that's what half of us wish we could do. But he's not here, he's in Melbourne, so he'll be right. Okay, so Regis Resources is a gold mining company, and we have our assets, our producing assets are based here in Western Australia, and we have this, well, it used to be a reserve, but now it's a resource sitting over in New South Wales. You may have heard of it, called McPhillamy's. I'll talk a little bit about that later on. But our production comes from Duketon, where we run it, we own and run 100%, and we own a 30% share in Tropicana. You can see the scale of the production. So last year, I think we produced about 418,000 ounces or so. You can see the split between the different sites, about 290 odd from Duketon and 129 coming out of Tropicana. We have reserve bases that take us out, what we see is up to 6 years and beyond. And I haven't presented a lot of material here on why we see we've got a lengthy life in our underground. Duketon really over the last 5 years has been transitioning from a primarily open pit operation to much more underground. We've started 2 mines in the last 3 or 4 years, and we've just commenced a 3rd mine, and we've got another couple that are twinkles in our eyes that we'll get to work on and hopefully bring on in the next year or two. So our ESG and how we go about doing our business, and we deliver it safely and we deliver it responsibly. We've had a great record, a great run on our safety front as measured by lost time injury frequency rate. We had a full year without a lost time injury. Now we've just had an incident in the last few days, not particularly high potential, but unfortunately an individual the way that they fell back on a railing, they cracked their ribs. And we're expecting that to be a lost time injury. And the reason that I mention it is it's just a reminder that no matter how good you are on safety, you can never take your eyes off it, never relax, never assume that everything's sorted and will keep on going the way you'd like it to. You really need to continue to remain focused and keep everybody onto it. Female representation as a measure of diversity, we sit at employees at 22%, a little bit above industry average, and our board is 33%. We've done some great work lately, introduced the safe work culture. We've launched that, and I'm very pleased to see that in place. Our land rehabilitation has been lifted over the last couple of years, so we're not letting a significant liability legacy build up. We both at Duketon and at Tropicana, we've put in place a solar farm at Duketon, which is just at the last numbers. We put in a 9 megawatt farm, not significant really. It was reasonable amount of the power, but what we've worked out, I think I saw some numbers the other day that telling us we're basically saving $85,000 a week on fuel costs alone just from using the solar. Apart from reducing our carbon emissions, it's a pretty damn good financial incentive as well. And Tropicana is putting in a massive implementation program of a wind farm and a solar farm as well. The 62 meg. Somebody told me that they think that's the largest private field that's been put into Australia so far. And also, certainly in the last couple of years, we've been really working hard to build a strong working relationship with the Manchinjarainalia, which are the local group in the Duketon area. What do we look like going forward? We're expecting our production range, and again, there's a lot of detail that sits behind this, but I won't go into it today, so you might think I'm sort of brushing over it pretty quickly, and I am. But the production range we expect to get out of Duketon is about 200 to 250,000 ounces of gold per annum going forward, and that's really off the back of having 4 or maybe 5 underground mines. And we see that the underground mines, it's a really interesting one when you're talking with investors about underground mines in Australia, because they look at the reserves and they just, particularly the generalists and the offshore funds, they look at it and say, well, you've only got 3 years of reserves, what's the point? And you say, yeah, well, there's these mines all across Australia that have had 3 years of reserves, and they have done for the last 10 or 15 years. They just keep on replacing and replacing. And there is a real unrecognised value in that. And that's part of the story that we have to sell as we've shifted from open pits, which is relatively easy to reserve life estimate, to the undergrounds. But they're good businesses, and we've got a great team that's really getting into the rhythm of starting and ramping up underground operations. At Tropicana, certainly out to the end of 2028. Got the right decade. That's an in-joke, sorry. There's only about 3 people that... Anyway, it doesn't matter. I thought it was funny. At Tropicana, we expect it'll run between this 135 to 150,000 ounces of gold per annum, and that's our share of it. Trop is a huge installation, 9 million tonnes per annum, pushing out somewhere between 420 and 500,000 ounces of gold, and so that's our share of it is 30%. So when you look at Regis and you see where's it going and what's it doing from here, we see strong, solid production coming from undergrounds at Duketon to this 200, 250,000 ounce per annum range. And from Trop, we'll see 135 to 150,000. So a good, solid production. And I'll help you sort of translate that into what that means for cash flow in a minute. The other piece, of course, we hold 92% of the Duketon Greenstone Belt, which hasn't really coughed up a lot of ounces relative to some of its siblings further south. And the key reason for that is just the amount of time that's been spent exploring on it. You look at the big belts, you look at the Norsemans and the Lavertons and the like, they've got big ounces that have been pulled out of them or identified, but they've been explored for 40 or 50 years. The Duketon Belt is a really interesting one. It really hasn't had a real focus until probably the last 10 years or so. So we see that while the size of it may not look much, it's actually got a huge amount of potential sitting in front of it from the exploration team. So we've got the assets that are sitting and operating. We've got exciting potential sitting in our exploration space. The other asset that we have is called McPhillamy's. It sits over in New South Wales. It's probably midway-ish between Orange and Blaney. Orange, of course, being the massive Cadia complex for Newcrest these days. It was planned to be, it's got about it had over 2 million ounces of reserves, doesn't have any now. The site, plus a little satellite that we've got nearby, has got about 2.7 million ounces in resource. The plans were to build a 7 million tonne per annum plant. It's going to cost us about $1 billion, 96 million, so it wasn't an insubstantial investment. But it was going to be a cracker of a producer, producing between 187,000 on average, ramping up to 235,000 ounces towards the back end because the grade improves with depth, at an all-in sustaining cost of about $1,600 an ounce. Now, if you look at what the gold price is today, and it's just a little bit under 3,900. So if we said it's 3,900, and you work out that it's producing 187,000 ounces per annum, and the margin of cash is, I've got to do some maths now, 3.9 minus 1.6 is 2.3, $2,300 an ounce margin. This would be an absolute cracker of a mine. And that's where we were heading. And then we had a Section 10 declaration declared over an area of the mine. This map shows the project area. It's a little bit, I won't try and show it with a pointer, the screen's too far away, but you can see there's a purple outline, not the cross-hatched area, but the overall around I'll give it a try over here and see what happens. If you look at this one over here, you run around the outside of it, that's the project area. Here's the ore body sitting in here, waste dump, rock waste dump, process plant, and run-of-mine stockpile, tailings dam. The Minister Plibersek back in whatever it was now, 5 or 6 weeks ago, made a Section 10 declaration over the tailings dam, which effectively rendered the project as it had been approved, and this project had been approved at state level and interestingly at federal level as well by under the EPBC Act, had been cleared, and that area, so it was a viable project, and we were getting ready to start to head in there, and this has meant that the project in its current form is unviable. We have nowhere else to put the tails. It took us, like several years ago, we looked at options, and we'll probably talk a little bit more about this with Babs, but basically as it stands now, we think it could take us 5 to 10 years to find a new, safe, viable location for a tailings dam. So as a result, on our books now, we wrote off $193 million, which is not everything that we'd spend on it at the time, but that's basically now sitting for us trying to work out what to do with it, with the team. So, righto, 5 more minutes till the end of this section, and then I've got another section. So this is our guidance. So this is what we put out to the market. So we're expecting to produce this year 350 to 380,000 ounces of gold at an all-in sustaining cost sitting between $2,440 and $2,740. And in actual fact, it's a little bit lower than that because our all-in sustaining cost includes about $150 an ounce worth of non-cash. So even at today's gold price, our business has really shifted. For those that have watched us over the years, for many years we were shackled with a very significant hedge book, which in the end cost us about $480 million worth of lost revenue. Well, we cleared that at the end of December last year. And we're now, I think last quarter we generated we built our cash balance by about, it was about a bit over $100 million. That included a tax refund as well, which our team managed to get. But our operating business generated $90 million. And if you do the maths and look and see at these numbers, this business has now shifted into a very significant cash generating phase. So from a point of view of looking at Regis and what it is, that's a bit of a snapshot of our business. Now, the other part of what I was asked to do was to give a little bit of a story as to, or a bit of background on how I got from being a Queensland-based mining engineer to filling in the afternoon chatting with you folks, which I'm enjoying, by the way. So I've got a little bit of a story to run through and a few pictures. I actually went to Queensland Uni. I started uni in 1981. It took me a few years to get through. But this is some of the experience and the background that I and some of my peers had at the time. So these are photos of vacation work. I worked for a company, my first mining job was with a company called MIM Holdings. And MIM had this fantastic program where anybody who was an employee of the company who had a kid at tertiary education, they gave them a VAC student job. It didn't matter what they were studying. That wasn't me. I got it on good looks. But the years, like, this was significant. Over 200 students would go and work in Mount Isa in the vacation period. It was an engine room of giving people great exposure, giving a chance to earn money. Really importantly, what it did was it gave people who had nothing to do with the resource industry, apart from the fact that their parents might have worked for them in Brisbane or anywhere, they went to a mine and they got a job and they saw mining firsthand. They didn't listen to some of the stories, pardon me, the stories that they might have heard from people who were influencing them at the time, perhaps partially ill-informed. So it was a really good way of educating about the industry. The other pictures there is, there's an interesting one, right, standing in front of that big cable reeler thing. I put that in there because that was worked at Blackwater Coal Mine. Now, that was 40 years ago. Right, this is how long some of these mines last for. That mine sold a few months ago to Whitehaven. It was part of a $2 billion deal for 2 mines. That's 40 years after the mine had already been running for 10 or 15 years at least when I got there. Queensland's assets in this coal space were amazing. I included the station wagon doing circle work down there in the corner because I thought the bloke that was behind that is a chairman of a rather well-known gold mining company, and I thought he might have been here today, but he's not. So now the other picture is me being a surveyor, which is why we had a 2-metre misclose when we lined it up. This is, and you'll see some fashion in the next few slides. That hat is, right, this is me showing my age. That hat is the only time you should ever wear a cap backwards. Otherwise you look like that. This is when I graduated, matured, I'd argue, on the right. Last day of uni on the right, some mates and I did the gorilla thing through the trees, but that's a graduation piece. Proud looking bunch of guys. Working underground in Mount Isa for several years. I think I was there for about 7 years. More statements in fashion of the time, but Mount Isa is an incredible piece of infrastructure. You know, smelters, 4 smelters there actually, 2 copper, 2 lead. Working underground, it was a really good experience. It was a great organisation to do your time in. I went up to, then worked out of Darwin and worked on the MacArthur River project when it was first built. Had a kid, became a parent. That's my wife. Then went to work at Olympic Dam with Western Mining. I put this picture in. That was my dad coming into the office at the time, and I remember being a little bit, I don't know, almost awkward and embarrassed about my parent wandering around. Now I try to do exactly the same thing to my son, and he won't let me in the building. They have too much good security these days. So I worked in Adelaide in a corporate role for a bit. Then I went to work for Newmont, Newmont being the gold mining company, Pajingo for a couple of years just before we sold it to Jake, to Evolution. And then I went to Boddington during its construction and the ramp up. Just an amazing place. 40 million tonnes per annum mill and 120 million tonne per annum mine. Some bloke there standing, I was telling him where the toilet was. And that's the first bar of gold that we poured. Actually, it's the second bar of gold we poured. The first bar of gold we poured it kind of fell over and spilled everywhere, all over the floor and went everywhere. But I think under the statute of limitations, you can't make OH&S claims on that. And then more recently, at the probably around 2011, 2012, I joined Mount Gibson, which has got a fantastic asset sitting up in. I had assets all over the place through the Midwest and up north of Broome, and then the photo on the right is just underground with the board at Regis and some of our samples. So look, it's just to give you a little bit of a taste. The folks here asked me to give a bit of background on what it is and how I managed to get to this place. Sometimes you stop and stick your head up and wonder how the hell you did it. Yeah. Well, I didn't think I'd get that emotional. But anyway, they're the people. Kind of feel like I'm at my own funeral and I've died already. Only on the stage and bad jokes.
Hey, Babs.
How you doing, Jim?
I'm all right.
It sounds like you're doing all right. There were some interesting photos there. They were short shorts. You don't see them on mine sites much anymore.
No, those were the good old days.
And the most important topic is the grand final. Will you be flying over for it?
Yeah, my wife managed to get some tickets online a couple of days ago.
So
We're in the nosebleed section, but we'll watch the Lions win, hopefully.
And you've heard about the Qantas engineer strike.
Yeah.
Interesting timing.
Yeah, what a coincidence.
What a coincidence. Look, the last time the Lions won, in fact, they had a pretty good run, 2001, 2002, 2003, so 3 premiership in a row. The gold price was $385 US an ounce.
Right.
Quite a bit different.
Stick another zero on the end.
Well, that's what everybody wants, isn't it? 2,660 roundabout US price at the moment. I saw Rosen this morning saying aiming for 3,000, but gold bulls are always wanting to do that. Australian gold price at the moment, 3,886. Got to be happy with that.
Yeah, it's okay.
It's okay.
We still need to get our costs down, so while all these suppliers and service and contractors are here, I just remind you that we're always looking to figure out how to cut costs.
The second most important topic of the day is what happened at McPhillamy's, or with McPhillamy's, or what is still happening. I thought I might just explain to you what Jim means by Section 10. So Section 10 comes under, it's a provision in the Aboriginal and Torres Strait Islander Heritage Protection Act, and it allows the relevant minister of the day, and it's the Federal Environment Minister, to protect areas of cultural and spiritual significance. So Tanya Plibersek made the finding on behalf of the Wiradjuri peoples. That's correct, isn't it? And what they specifically objected to was the placement of the tailings dam. Why?
Well, there's a couple of things in there. First of all, the group that was involved was a group called the Wiradjuri Traditional Owners Central West Group Corporation. They were a private group. It wasn't a representative group. It wasn't the Lands Council. It wasn't the Bathurst Lands Council or the Orange Lands Council. So the Orange Lands Council is actually part of the group that legally represents that area under New South Wales law. And so the minister, this application...
Just hold on a moment, Jim. We're getting a bit of feedback there, yeah? All ready to go again? Off you go. Sorry for interrupting.
No, that's all right. The application was put in by an individual, with then another couple of people joined them, and then this group joined, and the minister considered their information, along with information that we continued to provide through the 4 years that it was considered, because the original application was put in 2020.
2020.
So the minister found that there was a case for an area of cultural significance right underneath the tailings dam.
And what was that, though?
Well,
what is that?
What is?
And what is the cultural significance of it?
Well, at the moment it isn't clear. We're still, the minister has noted that these are areas of culturally sensitive and hasn't provided any details, and we're still waiting for what's called a statement of reason, which will hopefully give us some insight into what led her to make that decision.
McPhillamy is a $1 billion project. How did you get to this stage in a $1 billion project and not expect that this was going to happen?
Well, yeah, that's a fairly good question. I mean, the project, the original application was put in the middle of 2019. We worked our way through state approvals, and that included heritage assessment. We also worked our way through where required federal elements of it, but most of it was done within the state of New South Wales. That continued through 19, 20, 21, 22, with all these assessments, surveys, queries, permitting, approvals, various multiple departments that the team there had to work with. And then in last year, in March last year, all of this leads to the planning department in New South Wales says, well, we think there's a project here that can be approved because all of the issues are addressable. That went to a public hearing. There was a 2 or 3 day public forum where anybody could go along and show support or raise objections or support. The same groups all spoke at that. It was quite clear that there was a difference in opinion in one particular group relative to the Orange Lands Council, who, as I mentioned, is the legal representative body for that area. And the Orange Lands Council said close to words to the effect of, it was interesting, they said, and we respect it, they said that we don't support the project. They said, we don't support anything that impacts on our land, be it farming or mining or anything. And then they went on to say, but however, we do recognise that mining brings significant benefits and it brings us opportunities, so we don't object to it. And they also made commentary, and they're all on public record, that the group that had raised these issues that they'd raised, they didn't agree with it. They did not agree that there was any areas of significant heritage value there, and there was no disputing there was some, and they said they were happy for that to be managed with some procedures that we were working on with them. So and ultimately the state independent commissioners, there's 3 of them, they considered all of that, and then a couple of months later we got an approval from the state, from the commissioners saying they've considered environment, social, cultural heritage, traditional owner heritage, the whole lot. And they said, yep, the project can be approved and it's clear to go ahead. Because of the relationship with the feds, that had to go to the department that manages the EPBC Act, which also considered all of those same things, including heritage, which came from the same department, different section, but the same department as the minister involved in this decision, and came back with a tick. We were very surprised, came back about 6 weeks later. I think we got it in May or something like that. So we're basically, as far as we were concerned at that stage, we had all of our approvals. And then we knew that this application had been in the background, had been toing and froing, and we just felt that it was pretty clear, based on all of the decisions that had been made by other people taking into account the balance of all things, that we were expecting an answer, but we certainly weren't expecting the answer that we got. So it was a surprise, not because we were sitting around hopeful. It was a surprise because we felt, and it seemed to be pretty clear, that the issue had been considered by at least 2 other state and the federal department, separate ones, and the answer had come back saying it's clear.
Well, the issue is the placement of the tailings dam. It's a fairly big tenement, reasonable size. Why not move the tailings dam? Just put it elsewhere. Yeah, sounds easy. It does. Easily,
Mining
just like that.
is such an easy activity. I don't know why we hadn't thought of it before. There is a slide that I just want to show to give people some context. If you could put that up for us, please. No, not that one. Oh, that was the one we were meant to finish on.
Oh, yeah.
We'll come
we
back
could
to
put,
that one.
Yeah, we will come back to that one.
Yeah, you rushed me.
Yeah. I
so-
did not.
This slide here shows that you can see on the screen. That shows the project area. It's probably a little bit clearer than the one I put up there before. And you can see where the tailings dam is on that slide, which is that crosshatched area that's sitting to the top right-hand side. Now, if we wanted to move that, there is nowhere on that, and this was the comment that was made at one stage. This is a 2,500 hectare site, and the tailings dam only takes up 400 hectares. So the minister had sort of black man 400 hectares of space, which included that sort of umbilical cord looking little thing that runs down into the bottom left-hand corner up, because that's a Belubula Creek. And when we looked at it, there is just no way that you can fit that in. You can't go and put it on top of the existing ore body. You can't put it on top of the existing waste dump. You can't put it on top of the process plant. We can't go to the left because there's actually a little yellow circle there which had been identified as being of cultural significance, but because we weren't threatening it, it wasn't deemed to be a Section 10 area to stay away from. But it came with it, if you go and potentially impact it, I will declare that. So there's effectively nowhere on that place that we could fit a tailings dam. It's just, from an engineering point of view, it looks, the maths sound easy, 2,500 hectares for only 400,
20%.
What's the problem? But it's, as is life. Life is more complicated than just a simple number.
Can't move it off tenement?
Well, we don't own that property there we own. We don't own any other property in the area, so we would have to find a place. I mean, 6 or 7 years ago, we looked at a number of different locations. 3 of them were all on that existing lease, which have all been basically, if you go and have a look at them, you can't, just because of the declaration, you can't use it. The 4th area was to the south of that. We don't own any of the property, so we'd have to buy it if we could buy it. And part of the reason why we didn't go there in the first place was there's plenty of houses downstream of the tailings dam wall, a whole bunch of safety, environmental reasons. That place where it was located was the best place for it for a whole number of reasons, not simply quickest and the cheapest. It was actually the method of construction that we were using was downstream, was very expensive. The reason that I say it's not the cheapest and the quickest is because there was some statements made that it was, and it definitely wasn't. But our options at the moment are pretty limited as to what we can do with that.
Okay. The Minister has indicated if you do decide to put it somewhere else, she'll fast-track that, but I think you've just outlined why putting it somewhere else, obviously, on the tenements.
Yeah, I mean, we appreciate all help, all assistance, but in the end, sometimes you've got to be careful that you don't get too fast-tracked, because there's a whole series of organisations out there that are just waiting for you to step out of line legally and not follow due process, and they will challenge you. The EDO is a classic example. They're there to find legal missteps. So I think it's great to have, if the Minister would help with speeding up the process. But we have our own standards. We've got a whole lot of environmental. It takes us a year to do the surveys alone and make sure that we don't impact on the water and groundwater and table water. It just doesn't happen overnight. You just can't speed it up.
So what's the next step? What's Regis sort of mulling? What are you going to do?
Yeah, there's 2 things. We're certainly working on our legal options as to what we can do, which are reasonably limited. The AdShip Act, which was implemented in 1984, has some pretty significant powers. I mean, it was put in place before Mabo, and it was put in place to help protect Aboriginal heritage, which does need in certain circumstances, because back then various states were going off and doing their own thing, so they were able to manage it. But so we will look to see what our option, we are now looking at what our legal options are. The other side of it is we're just looking to see can we find another location and get to work on that, but that's going to take time.
There is precedent to overturn it from the Hindmarsh Affair or the Hindmarsh Bridge, I think mid-80s it was, 84. That was overturned on appeal, but it's not a good look, is it, for an industry that sort of, it does struggle in perception outside of regional areas?
Look, I think it's interesting. I think, well, nothing, you could argue that nothing that goes against a decision like that is a good look. However, what we'd like to think is that we can, there's been a lot of interest in this particular story, a lot more than I think anybody anticipated. And I think people appreciate that there are decisions that are made and then there are good decisions that are made, and not all decisions are good decisions. Would we, we will, you can't appeal, you can't appeal the decision. You can appeal whether there was fairness in the process. And if there wasn't fairness in the process, then that can overturn it, but the minister is then required to make the decision again and could easily just say, well, I still think the answer is still the same. It could be, there are ways to be able to turn it, but they're very long, they're very complicated. I think if the genuine story and if the thing that we're struggling with a little bit at the moment is we're not exactly sure what the reasoning is because we haven't seen the statement of reason. So while we
I thought it was actually quite specific and to do with the Blue River.
Well, it's that area, but then we've been there for years, and so we don't know what it is about the Bula River. That, yep, it's a bit of a mouthful, but because we don't know exactly what it is. I mean, our experience and our knowledge and what we view it has been really coming from the Orange Lands Council and learning from them what's relevant and what isn't relevant. Now, whether there's something there that group and we don't know, then I guess that remains to be seen.
I think I've said Bula before, but around about 1 o'clock in the morning.
Yeah.
So, which is when that word would fit. God, there's so many things we wanted to talk about. We're just up against time at the moment, so we're leaving politics alone. You did mention there something that is very dear to the heart, of course, of all mining companies, and that's managing your costs. So can we just take perhaps one example that you can give us of where Regis has been able to manage its cost? Are you looking at unit costs or does it need to be overall costs? Because that is of interest to everyone in the room.
Yeah, well, I guess one of the areas where we're really just getting started on, and we've recently, just in the last probably 6 months, have finalised and worked on an alliance agreement with our underground mining contractors, Barminco, and they've been in place since we started, but we've really restructured the way that contract works. And what we're hoping to see is that is going to result in, I guess, a team effort in terms of how we go about improving productivity and reducing our costs. So that's an area that we've set in place. We're yet to see that really deliver any goods, if you like, but certainly the way the teams are working together and cooperating, we're certainly looking at that. Another area where I think the team on site's done a great job is on our processing plant with the implementation of some just a reasonably unsophisticated but nonetheless artificial intelligence software that runs our plant, and we've seen a kick up in throughput, a kick up in throughput and consistency of between 3 and 5%. We're still waiting to see what that does, and that's great because the way to get milling costs down, because it's such a high fixed cost, is to just get more tonnes through at a faster rate. So, and that's what we're seeing there. So there's a few other things that we're looking at as well, but there are a couple of examples. And
that actually addresses one of the questions that Erin has asked, and that's where do you see the future of digital adoption for Regis Resources?
The future of digital adoption. Yeah, interesting. I guess, the easiest place to point to digital and getting more and more sophisticated is in ore body modelling, visualisation and design and scheduling. Our mines are, underground, of course we use remote and automatic and semi-automatic gear underground, none of which is actually too new. I mean, I worked at Olympic Dam in the late 90s, and we had we had automatic drills underground back then, and we had a series of 2,900 loaders that we were operating from the surface and on auto trams. So a lot of the technology we think is new, it's actually been around quite a while, which means its application more depends on how you design your mine and how you can find the right way to do it without putting people around you at risk, because you've got to be right on top of safety. I think the team's done some great work on the lifting the sophistication of our process plant, and maybe there's some more to be done there. But yeah, hopefully we can apply it in the exploration space and the geology space.
I think we should eat dessert and just keep talking, but we can't entirely do that. Look, we've got a call out to you from DM. No, this is from Terry Burns. A call out for wearing the old MIM tie, Jim.
Oh yeah.
Give us a flash.
Yep. I'll sell it for $500 if anybody wants it after.
You might need to sell it.
Tie for the first yeah.
You might need to sell it to get the plane home.
Yeah, well, it's interesting. I mean, not too many people would, I don't know whether anybody, it'd be interesting to know on a show of hands, how many people in the room have heard of MIM Holdings?
Oh, yeah.
Yeah, how many people heard of Western Mining, WMC? Yeah. I mean, MIM was, at one stage, was Australia's largest listed company for about 3 days, I think. But it's like a lot of things. East Coast is huge operations, multiple operations on the East Coast and offshore England, and it's interesting. I always find it, you know, the West and the East resource industry and how it does overlap, and in some places it just doesn't even connect.
Well, there were so many questions on Slido, and as I said, time was absolutely against us. I think this was one, you don't need to answer it, but there is a couple of questions coming through, and perhaps it's what many are wondering. Don't know if I'd put it in quite these terms, but how can the mining industry rally against what they've called extreme political risk? But it is a political risk.
How do we what, sorry?
How the mining industry would rally against that, but you have to keep it short if you're going to. I was just pointing it out because it is something that many in the room sort of wish to know.
Yeah, look, I think we all have a role to play. I mean, there's the companies, there's the groups, representative groups like AMEC, MCA. They have. They do the lobbying is not quite the right word, but they do press and present hard. But our battle is just as much with the community, and the community doesn't understand the contribution that resources makes to Australia. Last year, the taxes paid by Australian mining companies, just mining companies, and the royalties paid was $74 billion.
It's a lot of hospitals.
That's in 1 year. Now, I did a quick Google this morning to see Fiona Stanley, I think, cost $2 billion. So that means last year the resource industry earned enough to build 35 more Fiona Stanley hospitals. Or this thing was worth 1.6 billion, or cost 1.6 billion. I'm not sure what it's worth, but it cost 1.6 billion. You know, and that was just 1 year. The year before, the Australian industry contributed $64 billion worth of royalties. We are, without mining and without resources of the scale that we've got, there is no way that Australia would have the quality of life that we have. And how we get that...
Yes, it's something that needs to be... That really is a topic for a whole lengthy discussion, and it was all in here, don't you worry, but the clock, yet again, waits time and tide, waits for no man.
Those damn slides.
Yeah, well, it's Cass, yeah. Thanks very much, Jim.
Okay, thanks, Babs.
On behalf of the WA Mining Club, I'd just like to say thank you, Jim and Babs. Thanks, Drew. Thanks very much. Not at all. Couple of key things that I took away from the conversation. Love the career snapshot, flashback to the 80s and 90s. Obviously, Regis has got a bit in front of him with the McPhillamy project, so wish you all the best with that journey. Love the touch on the sentiment around family and support in the mining industry. I think is really key, and certainly one that resonates with me in particular. And lastly, I'd just like to thank everyone else in the room for your attendance today, your support of the club. It's been fantastic today with the numbers that we have here. Really looking forward to the next couple of months with Jake Klein and then Dale Elphinstone for St Barbara's Day. So thanks very much.